investors and traders, and welcome to the weekly market report with the Market Guys. I'm AJ Monty. For those of you who followed the report last week, I made the suggestion of taking some screenshots of the charts so you can see as evidence what candle charts can do for you with regard to forecasting the markets. And again, as I always do, I've left my lines on the chart from last week so you can see how things played out. Now again, to recap what I said last week about the diamonds, if you could see this little line going up, last Friday, which by the way was right here on this green candle, last Friday I said that we would move up during the holiday week initially, and that's where I drew this line right here, and my line stopped right there before I turned it lower. And you can see that on Tuesday, which was the day after the Memorial Day holiday, we went up just a little bit to test that high, then came down. And then we followed this line, again, perfectly, with today's low falling within pennies of the forecast that I put last week. So this, again, is just another testimonial to how well technical analysis works. And so what I'm going to do for you right now is erase all lines, and then I'm going to ask that you take a screenshot of the chart after I draw my lines for next week so you can see just how well this plays out. Now, the jobs report came out fairly weak, but this candle tells me that the buyers came back with force towards the end of the day. Initially, the market reacted to weak jobs report, and you can see here that there's a line of resistance right here. Now, this long shadow under the candle again tells us that the buyers came back with force, and whenever you see long shadows under the candle, that tells us that there's probably going to be a continuation of the up move after that candle has formed. So this is what my forecast for next week is going to look like. I think we're actually going to move up to retest this resistance line. So the resistance line here is my target for next week. The added volume bar here with increased volume tells us that the buyers came in with some force. Even though the Dow wound up lower today, we have a green candle on high volume. So it supports my idea that we'll go a little bit higher next week before turning lower. Now, if you've been following my reports along the way, you'll know that long term, I'm very bearish. I don't think this market is going to hold up once the bubble has popped, and I think we're very close to that bubble bursting. But in the meantime, there are some short-term opportunities that we can take advantage of, again, using candle charts as the main tool. So that's my forecast for the diamonds. As I go to the spiders, ticker symbol SPY, you'll see that, again, I left my lines in place, telling everyone to take a snapshot of that. I said we would move up to retest that resistance. Initially, that's what we did, and then I said we would pull back. And again, that's exactly what we've done. This doji, and you could even call it a spinning top, tells us again that the buyers came back with force. So what I'm going to do is I'm going to erase all lines, and then again, once I draw these lines, I want you to take a snapshot so you can see. I think that actually we're going to make a move to break out over that resistance point initially, and then setting another resistance point maybe a little bit higher right here. This is again from the longer term chart. So this resistance line that I'm taking from the high back here in July of last year is going to be my target area. So let me adjust this for you so you can see what my lines are going to look like for next week. So I think we're going to move up, break out over the short-term resistance to retest the secondary resistance up here right around 213.50. Again, that's for the spiders. Let's move on to the Russell 2000, which is a more broad-based index. You'll see, again, my lines are in place. I said that we would move up. We did, but we broke out over resistance. So this, out of all of the indices that I forecasted, was probably the least accurate. Yeah, we moved up a little bit, but we did not hold that resistance. We broke over it or broke out over it. So what I'm going to have to do now to get my next eyeball on next week's forecast is first erase all these lines as I've done in the previous charts, and I'm going to switch to a weekly chart here. The weekly chart will give us a little bit more information, and you can see that there's a resistance point right here for the Russell 2000. So I think that we can continue up in the Russell 2000 to retest that resistance point. I'm not going to make a forecast as to what will happen once that point is hit. We have to keep an eye on volume across the board to determine whether or not we're going to pull back from that resistance point. But right now, from what I'm seeing across the board, we're going to see a short-term rally next week. So hold on to that. Take your screenshot right there. We'll go back to the weekly chart next week to see whether or not this forecast is accurate, and you can get your lesson on technical analysis. Now finally, the Qs. It's QQQ. It's also known as the power shares. I'm going to go to the daily chart so you can see what my forecast was there, and that was spot on accurate as well. I said that we would move up initially. We did that Tuesday and Wednesday, only to fall back on Friday here today with a long shadowed candle. So this is going to be all erased again as usual, so I can draw my lines for next week. And I'm going to back up a little bit so you can see where I'm drawing my resistance point from. This high back here from April of this year is going to be the next resistance point. Now the key signal that you have to look for is, again, I think we're going to move up here. I don't think we're going to storm up. I think we're going to gradually move up to test that. You're going to have to keep an eye on the volume. If the price goes up like I think it will, and you see the volume dropping, that means the buyers are weakening. And then for the following week, as we get into mid-June, we can see another pullback. Now this is great information for the swing traders and even the day traders that are out there, because this is fast money that you can make. In fact, I was talking to my brother-in-law Peter just a little while ago. He took some positions based on what I recommended to him, made a good chunk of change here in just 4 to 8 hours, and the success that we're seeing is right across the board as long as you're using technical analysis. So again, my forecast for the Qs is that we'll go up and retest that resistance. And one of the other indicators that I use is the VIX, which is going to be my final chart that we look at here. My forecast last week for the VIX was that we would pull back and bounce off of this support level, and that's exactly what we did. We bounced off of the support and then came right back down. So there is a good possibility the VIX could go a little bit lower from where we are right now, but that's based on what I'm seeing on the major markets. I think we could go a little bit higher, and then we'll go a little bit lower from there. I'm not going to go too far out into the future. It'll make your head spin. But for right now, the support level that we have to watch is this low right here. I'm not going to determine at this point how far the VIX could go, because it's not a stock. It's an oscillating index, but that is the support level that we have to keep an eye on. If we bounce off of that support towards the end of next week and maybe go higher, I could even do this maybe to see we'll go higher from the VIX here. I'll project out, probably leave that line in there for a couple of weeks. Then we can use that again as a leading indicator along with volume. If you'd like to learn more about what we do at The Market Guys, just go to themarketguys.com, click on the video tab right there, and you will get to the library of videos known as Market Shots. These are very short videos that we have that teach you about some of the things that I've mentioned already. You can talk about breakouts. You can look at spinning tops and dojis, which I've mentioned already, hammer patterns, which we've seen on the charts, and much, much more. Now, my goal is to help you, your family members, and all of your friends become more fluent in the art of technical analysis. If you can learn how to read the charts like I'm showing you here through repetition, then not only will you profit more, but your percentage of accuracy will go up and you'll be better at managing the risk. Technical analysis is the best tool that you could use for managing risk so that you're not subjecting yourself to a catastrophic loss. That's the whole point of what we do here at The Market Guys, is to show you how to take charge of your money. So thanks for joining. This is AJ Monty, Chief Market Strategist for The Market Guys, and we'll talk to you soon. So long.
This video segment is a small part of what The Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.